Hey everybody, it's Jer. So I want to do a video about, that was kind of high pitched. I want to do a video talking about why stocks will sometimes seemingly randomly drop or sometimes seemingly randomly rise. Something that a lot of people in stocks don't understand is options and how options affect stock prices. But they do affect stock prices, sometimes in major ways, especially on the week that stock options are set to expire. The reason for that being market makers and other firms who have sold options on a stock will work to bring a stock down or make it rise so that they don't have to fill those contracts. Is it legal? Yes, it's legal. It probably shouldn't be, but I don't know that there's a way to actually make it illegal. So what ends up happening is those same people who have sold options on stocks are same firms. When I say people, I mean firms and people in general, retail traders too. They will sell stocks at a cheaper rate and work to bring a stock price down, because even if they lose money selling stocks at that cheaper rate, if they can get the stock price to go down instead of rising, let's say they sold a ton of call options, which is a call option is saying that it's believing that a stock will go up from wherever it's at. There's a strike price, and that strike price is what you can buy that stock, or you can buy that stock, 100 shares of that stock. Each contract is 100 shares. That's strike price. You can buy that stock, the 100 shares, at that strike price, regardless of whatever the price is whenever you are exercising your option, your call option. So let's say like a stock is currently trading at 80 cents a share, which is a penny stock. A stock is currently trading at 80 cents a share. You see options for a month out or 2 months out or a year out, whatever it happens to be. You believe that stock by that time will reach $1. So instead of buying the shares at 80 cents, you buy 100, you buy one contract, which is 100 shares, to be able to buy that stock at $1 sometime between now and whatever time the expiration is. So you pay a premium for that option to be able to buy that stock sometime between now and when the option expires. I hope I'm explaining this right and then it makes sense. So you pay that premium. Let's say you see a year from now the strike price dollar options, call options are 10 cents a piece. So instead of buying the shares at 80 cents a piece now, you go ahead and buy the option contract for 10 cents each share, and you pay $10 for the option to buy 100 of those shares at $1 in between now and whenever that expiration date is. So whoever sold you that will want to not, for the stock to not be over that $1 at that point, because they want to keep their shares. But they are getting paid that premium, the $10 or whatever it happens to be that you pay for those contracts, for that contract. So they will sell, let's say that they sold these call options, they sold thousands of them, which is, tens of thousands of shares, actually probably more than that, hundreds of thousands of shares. Instead of giving up those hundreds of thousands of shares, they see it more valuable to try to bring the stock price down. So they'll sell shares to bring the stock price down. And they benefit from this. Also, they might not have to sell a ton of shares. If they can make the stock drop quick enough, then they can hit enough of the stop losses along the way to get other people to sell their shares to bring the stock price down even further. And they don't even have to do half the work because half the people are selling out, or people see it dropping and are like, oh crap, get out, I don't know what's happening, get out. And there's no news, but it's dropping because it's the week of those options expiring. And these firms, mostly firms, sometimes just normal traders, don't want to give up their shares. They just want to keep that premium, and they see it as more valuable to, like I said, bring the stock price down. So what ends up happening is the stock price will just drop dramatically, very quickly, within like a week leading up to stock options expiring, because these firms believe that it's easier and they lose less money if they bring the stock price down than if they just sold and had to fill those contracts. That is why a lot of stocks this last week dropped so dramatically on basically no news. Some of it is inflation stuff and other stuff that's happening, but a lot of stocks that didn't have individual news dropped extreme amounts, and that's why, is because the firms had oversold on option contracts and had to bring the price down for these stocks. Let me pull this up real quick. I actually wrote about this on, hopefully this is the right thing here, on Stock Voyager, why a lot of stocks go to crap randomly, options expiring. So you can find that on stockvoyager.com. So the way that you can see when options are expiring. So options expire every month, at least every month, options in stocks. Sometimes every week options in stocks are expiring. So look at NVTS. You can go in and look at when their options are expiring. So December 17th, January 21st. It's always the third Friday of the month. Or if they are expiring weekly, then it's every Friday. And they actually expire on Saturday, but depending on which brokerage you use or which platform you use, they stop trading at a time on Friday, so that those brokerage have enough time to be able to let the contract owners know that they are going to be exercised if they're being exercised for shares. So it's always the third Friday, unless that Friday is considered a holiday, and then it'll be the third Thursday of the month. Options expire. So you can kind of know that, oh, my stock is dropping a little bit. What's happening? That can be it's not necessarily the only reason, but it can be one of the reasons why a stock is dropping dramatically over a week period, because of options. So If you can't find any news on why your stock that you're in is dropping, your company you're in is dropping, this could be one of the reasons why. So I wanted to make a video about that because I did have people who are in Wader Holdings. They're like, the stock is dropping, crazy, what's the news, what's happening? And there was news, but it was a week before that Morgan Stanley had sold some of theirs. So it shouldn't have affected things a week later. The only thing I could really find was that options were expiring, and so that was one of the, I think, primary reasons why Wader was dropping and other stocks. I looked at a lot of different other stocks that were trading options or that had options expiring that week, and they were also dropping. So I feel like that has a lot to do with it. So it's something to keep an eye on. If you're just getting into stocks, or if you're in stocks and you don't do options, something to keep an eye on is options, even if you don't do options, because it does affect stock price, and it can affect stock price dramatically, especially for smaller cap stocks, for like dollar stocks and penny stocks, whatever. It can affect it dramatically because it's so easy to bring the price on those down because it's such a low number. So just something to think about if you're in stocks and you see your stock dropping, that might have something to do with it. Okay, I wanted to share that. Love you all, and I will see you very soon. Mwah.